I'm Sarah Borkes-Keeter with REIT.com. I'm here at REITWorld 2014 in Atlanta. I'm joined by Matt Wokasch, Vice President for Advisory and Consulting at Green Street Advisors. Welcome, Matt.
Thank you for having me.
And what do you believe was the most influential trend affecting REITs in 2014?
That's a great question. As you mentioned, I work on the advisory and consulting team of Green Street. We work with management teams and investors that are trying to identify ways to maximize shareholder value. This puts us in a position to see trends developing well before the public markets. And as we look back at 2014, one of the biggest trends that's been developing has been the management teams of C Corps trying to monetize the value of the real estate holdings.
So Matt, what spurred the recent interest in monetizing the value of real estate portfolios?
Yeah, a key driver behind that has been management teams' desire to tap the lower cost of capital available to real estate companies. To put this into perspective, every month Green Street publishes a valuation comparison between REITs and the S&P 500. And for the past several years, REITs have traded at meaningfully higher multiples relative to the C Corps. More specifically, REITs trade at roughly a 19 times forward earnings compared to the less than 15 times that the S&P trades at. Management teams have been inspired by this valuation disparity to review their real estate holdings to ensure that they're being adequately appreciated by the public markets. You can ignore a valuation disparity for a while, but the longer that spread exists and the wider that spread becomes, the more pressure there is for management teams to capture that value. I believe 2014 was a tipping point for many decision makers.
And how have companies tried to monetize their real estate portfolios?
I would say the most straightforward approach that management teams have employed has been a REIT conversion. And this has taken a C Corp whose operations are heavily grounded in real estate and structures it in such a way that they can qualify within the REIT rules. Corrections Corp of America and Geo Group are two companies that recently completed this transformation. And following that conversion, they've performed extremely well. In fact, nearly every company that's converted under this method has outperformed the REIT benchmark. Even though the performance has been particularly good, it's difficult to structure an operating company within the REIT rules. And as a result, I suspect most of the companies that can make this announcement have already done so.
Well, thank you very much, Matt, for joining us.
Thank you.
And for more news and analysis on all things REIT, please visit REIT.com.